How I made close to 5,000 in profits trading just 25 contracts at 15 cents. Strike 277.50 calls from 15 cents to over $2. This wasn't luck. This was planned. If you are new to my channel, don't forget to like and subscribe. Let me show you that in detail. In this video, I'm going to walk you through an Apple 0 DTE and 1 DTE options trade that turned into a strong multi-thousand-dollar winner, not because of luck, but because of structured observation, price action, and outcome-based thinking. I'll explain how I watched Apple from earnings day, how I built a directional bias over multiple sessions, and how that led to a high-probability options trade. This is not financial advice. This is simply how I analyze charts and structure trades. On earnings day, Apple reported solid numbers. Apple Earnings Summary, Q1 FY 2026. Apple reported record-breaking quarterly results with $143.8 billion in total revenue, a 16% year-over-year increase that topped Wall Street expectations. Earnings per share, EPS, soared to $2.84, above estimates, marking a 19% annual increase and setting a new all-time EPS record. Revenue came in above expectations. iPhone sales were stronger than projected, services revenue continued to grow, margins remained healthy, and forward guidance was stable. Overall, the earnings were objectively good. The stock initially reacted bullish and pushed all the way up to $268.34 after the release. But then something important happened. Despite good news, price reversed hard, gave back gains, and settled deep into negative territory by the end of the session. That told me institutions were selling into strength. The next day, Friday after earnings, Apple opened slightly lower and start trending higher. But instead of continue trending, price chopped sideways most of the day. By the close, Apple was sitting very close to the previous day's closing price, showing the bullish long-term trend still intact. So now we had big earnings move up, sharp rejection, sideways consolidation. This combination often leads to a tradable expansion move in the following sessions. Based on that, I entered 1 DTE contracts on Friday near the close and sold them on Monday for over $3,000 profit. You can watch that trade breakdown. Link will be on screen at the end, but that's not even the main trade of this video. On Tuesday, I continued watching Apple closely. Apple attempted to move higher, but the overall market was weak. Instead of collapsing, Apple held its ground and printed a small-bodied candle, essentially a doji-type session. This was key. Apple didn't dump. Apple didn't break structure. It simply paused. That behavior told me buyers were still present. This is where outcome-based planning comes in. After a large Monday move and a small Tuesday retracement, I mapped out 3 realistic scenarios for Wednesday. Outcome 1. Price opens near prior levels and sells off, giving back 50% to 100% of Monday's move. Outcome 2. Price opens near Tuesday's high, or gaps up and continues bullish, pushing toward the next visible resistance. Outcome 3. Price opens near prior close and stalls, forming another doji. There are always many possibilities in the market, but based on structure, context, and Apple's relative strength, outcome 2 became my primary expectation. Late Tuesday I entered, strike 277.50 call option price, 15 cents each, and brought 25 contracts, total risk, about $375, small risk, large upside. On Wednesday, Apple opened strong and continued trending higher. The bullish trend stayed intact. My option price steadily climbed, 0.35, 0.40, 0.80, 1.20, 1.80, over 2.124. At peak, the contract touched 2.24. As price approached my projected resistance around 207.80, I began scaling out. I sold 20 contracts at 158, 5 contracts at 188. I originally targeted around $2.20, but I chose to protect profits instead of getting greedy. Later, price stalled as AMD strength lifted indexes and Apple lost momentum. Risk management saved the trade. This trade worked because earnings context, institutional selling after good news, Monday expansion, Tuesday controlled retracement, relative strength versus market, predefined outcomes, cheap options with asymmetric payoff. Was there some luck? Sure, but preparation created opportunity. The biggest takeaway, I did not predict the future. I planned for probable outcomes. Then I positioned with small risk and managed the trade logically. Though I traded this on daily chart setup, this kinds of setups you can find in 15 minutes, 30 minutes, 1 hour, 2 hour candle chats as well. Support and resistance breakdown video link will appear at the end. If you want more real trade breakdowns like this, like and subscribe, and don't forget to turn on notifications. Thanks for watching, and I'll see you in the next one. This same process on how to read the charts based on models, I have outlined in my new book 3 Candle Edge.